Well, good morning or good afternoon, wherever you are coming from. Let me know if you could in the chat that you can hear me loud and clear. Oops, just a second. All right. What? Turn that off. I just turned the light on. I always forget sometimes. I don't need the light on that necessarily when I'm just sitting here trading, but it's certainly helps with the video in this thing. So needed to get that turned on real quick. I keep forgetting. So it's summertime here, so it's light. It's almost light when I get up at 5 or a little bit before. It's usually light by 5 o'clock out here now. So awesome. Thanks, Andrew. Hello, Kevin. How's the week so far? A little crazy news last night, huh? It's I think it's going to get crazier over the weekend myself, but we'll see. It obviously has an impact. It's one of the reasons. I mean, I grew up in a household where we paid attention to stuff that was going on around the world anyway, but it definitely has an impact on our trading. So it's a good idea to stay as informed as you can. There's days I wish I didn't. It's like I don't need to hear all this. I've got friends that don't pay attention at all. They're totally clueless to what's going on, which is fine. I mean, if that works for you, it works for you. But it definitely is going to have an impact on your trading if you, if you don't pay attention to see what's going on. And I think today's a perfect example of what that means. Let me turn this. I've been really bad about this lately, making sure my phone's not off. Thanks, Amelia. She's not in here, is she? She's texting me. Um, like they're waiting for you. Like, I know. But let's get started. I'm not a registered. I'm not a registered broker dealer or investment advisor. I'm not going to give you any recommendations or advice here. Everything that we do is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. What happened today? I don't know. You're shitty. I'm freshly shaved. I just got out of the shower. I didn't want you all to smell me. Uh, I don't necessarily have to shower, but usually I try to at least be halfway clean for these things. I know it sounds goofy, but hey, welcome to my crazy life. But here's all the events coming up. uh, so Inner Circle, you see the dates there for June 16th and 18th, and then Power Option plays core trading June 16th. Oh, okay, one's 7, one's 8. Mastermind Group the 17th, Trading You the 23rd. I think that's the one I'm doing. Market Movers is the 25th. And then free online workshops, Power Hour every Monday at noon, and Trading Coaches Playbook, this one every Friday at noon. Power Option plays Monday and Thursday. Cover Call Explore with Trip on Thursday, and then Brandon's E-Mini Think Tank Monday, Wednesday, and Thursday. So you should all be familiar with those, right? So, and then of course you can find us on all the social media platforms. So take note of that if you haven't. I'm on my fourth cup of coffee today, then I'll be done. But if we haven't met, these are all the tools that I have created over the years. Patterns and Flash, all about technical analysis. Weekly Whispers, which is basically my weekly analysis I do for my own trading. And I just record a video explaining what I see. And sometimes I find some squirrels. And then small account, big return. So if you're working with a smaller amount, that is something I did a couple years ago. It's been pre-recorded. But you can get that and go watch it. You have access to it. I don't remember. I think it's for a year. I don't remember exactly. Maybe it's just for a quarter. Maybe it's a lifetime. I honestly don't remember. So I don't. I usually don't get into the back end of things. I let the team do that. The sport team's awesome, so they will take good care of you. And I just try to stay focused on mine. Try to stay in my lane. So sometimes it's hard to do, but not when it comes to that stuff because all that stuff on the back end, I'm not that familiar with it, nor do I enjoy doing it. So, well, there is the question of the day that you probably saw. What compels us to pull the trigger? I know you all thought that first. That's the first thing, right? Is fear. I said, well, pull the trigger. Well, the first thought probably went, well, pull the trigger to get into a trade, but you also have to pull the trigger to get out of a trade, right? You have to pull the trigger to scale in, scale out. Anytime you're entering or exiting in a trade, there's pretty much constant fear, right? Well, the goal is to not necessarily not have it, but to control it and manage it in a healthy way so that your fear is under control. So you're not freaking out and panicking. Fear is normal, fear is healthy, fear is natural. Panic is not. Panic is not a good place to be. So if you've gone through all the scenarios in your head of what could happen, what possibilities could happen, and this might happen and that might happen, and what if this, what if that? If you've gone through all those scenarios in your head, then you should be prepared for just about anything that comes. So in reality, you should never ever panic, right? Because there shouldn't be any fear. You should be prepared for it mentally. I mean, to be honest, that's what military and cops and firefighters and all that, that's why they train so hard. Is so that they're prepared for any situation. You could take athletes too, right? They're out on the field training day in and day out, week in and week out, all for what, a 2 hour game? If you're talking football, 2 or 3 hour game on a Sunday. You spend 40, 50, 60 hours a week. Hey, Rhonda, training for 3 hours. Well, yeah, that's that way when you get onto the battlefield, whether it's a sports or war or the streets of LA, right? Then you don't have to think and try to figure out how to respond. You've trained on how to respond to it. You already know. It's an automated response. And that should be one of the goals when it comes to trading is get to a place where you don't think about it. You don't have to go, what do I do here? What do I do here? You either pull the trigger or you don't, right? Because sometimes it is. I mean, in the case of, military or law enforcement, it's a life or death decision and you got to make it split second. And it's not any different than, I mean, athletes, obviously it's not life or death thing, but you got to make a decision, right? You got a pitch coming at you at 90 miles an hour, and it's going to be to you in a second or less. You have to make a decision split second. You don't really have time to think about it. You have time to react. That's all you can do. So same thing goes with trading is you've got to train yourself to be in a position so that no matter what happens, no matter what is coming at you, you can make a decision just like that if need be. Now, hopefully, I mean, you have it planned out, you know what's going on, and these things don't move necessarily. Stocks, for the most part, don't move that fast, generally speaking. Occasionally they do. Futures do. I missed one this morning. I'm like, ugh. I was literally grabbing the mouse, going to pull the trigger, and by the time I got there, it had moved 3 or 4 points in literally 10 seconds. Just went like, I was going to short gold. It was like, I just missed it. It still kept going. I still could have picked up 6 or 7 points, but it was too much risk at that point. So I just left it. And there was a few more trades that could have gotten, but the main goal in trading should be get to a place where you can manage and control your fear well. That is good to hear, Jennifer. She said, the longer I trade, the less emotional I have become. I think that's a good thing. It is a good thing. And I wouldn't say that you've become less emotional. You've learned to manage it and control it better. Because I'm not going to lie, this morning I'm sitting there and I got into a trade and it very quickly moved in my favor. And I was in it and it's moving fast. And I'm sitting here just cheering it on like, go, go, go. I mean, 25 years, I'm still emotional. It's not going to go away. It's always there. But it sounds like you're getting it under control and you're learning to manage it in a healthy way, a good way, right? But yeah, fear alerts you to something. God gave us fear for a reason, to keep us safe. That was the good purpose we have it for. Unfortunately, what happens is a lot of times we get in that panic mode or we freak out and we have negative things that come from the fear and the stare. And that's the part that we need to learn to manage and control. When it comes to trading, that's the thing with when you get money involved with just about anybody, I mean, it creates a lot of emotion. I mean, just look at, I don't know why recently I've heard these stories of, families that are, they literally get torn apart over money. Mom and dad die and, there's a $500,000, $1 million, $2 million estate. And one person thinks that they deserve something or they want this. And the whole family literally gets torn apart over money and materialistic things, which personally I think is stupid, but I mean, they're materialistic things, but A lot of people are like that. It's just it's an unfortunate deal that it happens, but welcome to people. It's just the nature of the beast, unfortunately. So, but that's good to hear, Jennifer. And I imagine that you're probably I've never really had an issue sleeping at night, but I can sleep just about anywhere. You can ask my neighbor's dad. She's got pictures of me at a restaurant, at a party, falling asleep on the couch. Like, whoops. I blame my dad for that. But also, I'm up early and I work a lot. So by the time 9, 10, 11 o'clock rolls around, especially after, 2 or 3 beers, it's like I'm out. Once I hit a wall, I'm there. There's no stopping it. I remember years ago, I lived in an hour north of my hometown. I was driving home for the weekend to hang out with friends. And I was tired because I'd worked a lot that week. I mean, I was 19 years old, 20. I stopped 15 minutes south of my hometown. There's a little mini mart. We used to stop there. And um, I grabbed some NoDoz because I knew coffee wasn't going to do it. And I popped two. I wasn't doing anything. I popped two more. It says only to do two, right? And then I popped two more because it was doing nothing for me. Like 10 minutes later, I'm still falling asleep. So I popped two more and I'm doing what I can until these things kick in. I ended up taking 5 of these things and I was still falling asleep. I made it home. I only had 45 minutes to go. But even after 5 NoDoz, it wasn't keeping me awake. So yeah, once I'm at that tired point, I'm done. Anyway, how do we get on that? Oh, you can sleep at night. Okay, that's good. But it's the nerves in the middle of a trade or when you're missing the trade that is the hard part. Just like this morning. I mean, I'm looking at it going, well, there's about 1,500, 2 grand left on the table that could have pulled in 10, 15 minutes, but it is what it is. So we'll talk about that. So number two is greed, which you know the proper spelling of greed, right? Greed is fear. People think greed is about wanting more, and it is, but it's really about the fear of missing out on more. So it's just greed is a superficial thing that we see. We call fear of missing out greed, but that's all it is. Because how many of you have been in a trade, right? Where you get into a trade, then you get out of the trade, and then it keeps running, and you would have made more money. I'm in one right now. That I mean, well, here's the beauty. I'm literally left. I took a 50% gain when I would be almost at 300% right now if I would have held on for another 2 or 3 weeks. Does it make me mad? Yeah. I paid $1 for these options. I sold them for $1.50 after like 3 days. And I'm like, cool, I'm good with that. But here's the reason I'm good with that. I still have a position and I'm still making a killing on that. Actually, I still have a bunch more contracts because this is one that I've been in and out for the last 6 months. I actually bought some long-term positions. And then when it pulls back, I'll buy some more. It goes up. I sell some of them, take profit. So I've been banking profit all along this uptrend. And then I'll pick some up, I'll take some profit, but I still have a position there. So while I'm cranky that I missed out on another 150, 200% rate of return on this part of the position, I still have a position there that I'm still killing it with. And I expect it to keep going actually. So hopefully I'll have, it's a longer term, it's a gold stock, right? And gold is cranking mainly because of what happened last night. Actually it's sitting right at literally right now, 34.41.6 is was the closing all-time high, and that's where it's at right now. It hasn't hit the intraday high of 3,500, but the closing high is 34.41.6, which is like I said, if it closes above that today, yeah, all bets are off. And depending on what happens over the weekend, it's gold's probably going to keep rallying. I don't see any stop to it. If it does what it has done historically in anywhere from 3 to 10 years, we could easily hit $10,000. If you go back and look at the long-term chart of gold, it'll go through these 10 or 15 or 20-year lull periods where it kind of does nothing. And then it'll go a 5 or 10 year period where it will be 5, 6, 7 times where it started. So if you run the numbers on it, you do that. I've done it real quick and it's yeah, it's very possible that gold gets to 10 grand. So um Yep, that's normal. It's never. That grease still gets me. Hard not to try and squeeze the juice out. Well, usually my trade back software that they've gotten out. Yeah. Well, and that's getting to this, and that's one of the beauties of scaling and trailing. There's a class right there, scaling and trailing. Use a trailing stop or scale or both. We get so a lot of times it's easy to get stuck in this box where we think that these concepts we can only use one at a time. You can mix and match. It doesn't have to be one thing. You can do, if you pick up 10 contracts to start, you can take out two or three and say, there's lots of momentum. It's running like mad. I don't want to get out yet, but I do want to protect my profits. So let me just take two. Then you put a stop on some of them. And then if it gets up to a point and it's running, maybe put a trailing stop on it. You can do whatever you want. I'll cover that here in a minute. It's back down to the question. You bought a gold coin 20 years ago? Depends on how much it weighs, Brenda. Let's put it this way. I'll jump off this real quick and come back to it. Well, here's gold right in the background. So there's gold. You got, well, this one on the far left there that you see. Maybe it's on your right. I don't know what it is, but it's on my left. That is the daily chart. And that line right there where it's sitting at the sol line, that is the closing high. 34.41.6 is where it's at. So it's a little tiny bit above that right now. Well, there it is in the middle. This is the 4-hour chart. 34.41.6 is the closing high, and it's sitting right there right now. So if you have a one ounce coin, which is what I would guess it is, if you bought a coin, so that 1 ounce coin is worth right now, it's worth $3,442. I don't know how much you could sell if you go down a pawn shop or a gold dealer or something like that. I don't know how much they take. I don't think it's a lot. I don't think they make a lot on them. From what I hear, it's a volume business. It's not a big profit business. It's volume. You have to weigh it. This price, the 34.42 that is sitting at right now, that's per ounce. 34.42. That's per ounce. So if the coin weighs exactly 1 ounce, it's worth $3,442 at this minute. It could be $3,400 by the time the day's over. It could be 3,500 too. So, I mean, you got almost a 700% rate of return. If you paid $500 for it 20 years ago, 700% is not that bad. Actually, gold's outperforming everything right now. The overall market, everything. It was 2000 just 8 or 9 months ago. So it's literally up 50% in less than a year. So it's actually interesting when you when you look at it because all these everybody's about Bitcoin and all this stuff. It's the greatest performing asset of all time. It's like, yeah, I don't really believe that. Maybe if you take it from the very beginning, but it depends on where you bought it. Everything's relative. I can't stand that when people say it's the best performing thing of all time. It's the best performing thing of this. It's like, really? Compared to what? Because it all depends on where you enter and where you exit. The rest of it doesn't mean anything. Okay, Bitcoin was worth a half a penny at one point. Yeah, it's gone to 106,000 from the very beginning. But where did you buy? What if you bought 3 years ago at 100 grand? You're only up 6%. That's not best performing. That's horrible performance. 3 years, 6%, that's 2% a year. You get more in a savings account. So yeah, it drives me nuts when these people say it's the best performing asset of all time. If it keeps doing what it's done, it's going to go 29% a year. Well, that's why we say past performance doesn't guarantee future results or whatever. You know that saying, right? You know the thing. I had to get it in there. Sorry. That's what it felt like for a minute. I don't know if I'm qualified to do this anymore. Uh, yeah, the spot price for gold futures is per ounce. So yeah, if you weigh your coin, I don't know if you have a scale or not, but if you have a food scale, you can measure it. Now who's doing squirrels, Brenda? I'm gonna blame you for that. Anyway, getting back to you can. Yeah, the beauty is, I mean, and I think that's one of the things that I find fun about trading is the creative side of being able to get creative. I didn't realize that I was creative until probably 20 years ago. And that's one of the goofy reasons I like to cook because I like to throw just weird conglomerations of food together because I like to eat mainly. But there's certain things you can't get at a store. It's like, what if I do this? What if I do this? And so I just take stuff and start throwing it together and see what comes out of it. So, and then I eat it. It's like, yeah, that's pretty good. But anyway, it's my creative outlet because then I can stuff my face and eat. Uh, WSC. Some of you know what that is, right? Woulda, shoulda, coulda. This is a deadly syndrome, and it is it's it's really incorporated in fear. It's part of the fear thing, right? Because you sit there and like, and I've had it five, six, seven times just this morning with that gold trade. It's like, should have gotten in. There was two times this morning before the one trade I actually did do. There was two or three times like, I should have gotten in there. But then the first time I was like, I should get in there. It's like, nah, I'm gonna wait. I don't like to set up that much. I'm gonna wait. And it's a good thing I did because I would have lost. And the next time it broke out, but then it pulled back and dropped way below it. It would have stopped me out. I would have taken a max loss on that one trade. And then it bounced back and broke back out again. And then it pulled back and it did a perfect role reversal. I'm sitting there watching. I'm like, should I or not? Boom, it takes off, runs, I think 4 or 5 points, which would have made a profitable trade. But the way I have my setup structured where I have basically four contracts. I take one out at 1 point, one at two, one at three, and then the other one just has a trailing stop that just keeps going. If I hit the 3 point mark, then I'm profitable no matter what. The one that's behind it, I've banked enough, and then the trailing stop on the other one, I'm guaranteed at least $150 on that one trade. If it just runs 3 points. So all I need is the 3 point move, and I'm profitable. A 2.5 point move, I get about break even. So that's what I'm looking for that. But it's really easy to get the woulda, shoulda, coulda. It's like, should have got in there. Literally just this morning from 4 a.m. when I started looking at things to just before we started, actually 8 o'clock, 8:15. About 6 or 7 times. I'm like, should have got in there, should have got in there, should have gotten in there. But I got in one time, pulled the trigger, and it worked out exceptionally well. So today's a good day. But woulda, shoulda, coulda is the danger to this syndrome is not only that you sit there and you kick yourself, but you don't want to let that syndrome affect the next decision for your trade. And that's where we make the mistake. Oh, should have gotten in there, should have gotten in there. And then because you're anxious or you're nervous or you're mad that you missed a trade, now you're going to make a bad decision on the next opportunity because you see what you missed out on. I could have made $1,000 there. And now you want to make $1,000 because I should have made it. So now your mind's in that spot where you're like, okay, well, let me pull the trigger here. Maybe some of you can relate. Maybe it's only me. I don't think so, but where you're cranky and upset because you missed out on it. I know that it's all of you because at the poker table, I hear guys all the time. It's like, I should have stayed in. Last time I played, it's been a couple months, but I had a 3-5 offsuit. It's a junk hand. The odds of anything coming are probably 1 in a million. Well, guess what happened? Ace deuce 5 came up, or ace deuce 4. I would have flopped the straight. The odds of winning at that point would have been probably 95, 98%. But I threw it away because it was junk. And you sit there like, I should have stayed in. But you don't know what's coming. You don't know that the flop's going to come and give you the monster hand. So you got to make a decision based on what you have. But then it's easy. And I hear guys all the time sitting around the poker table, man, I threw this away. I threw that away. I do it too. It's human nature. It's fear. The problem comes, and I've done this in poker, where you do that, and the next time you get a 3-5, if you get one soon after that, that memory's there. Remember last time I threw a 3-5 away? I would have won. What do you do this time? You throw your money in. Even though it's still a horrible odds card, horrible odds start, you remember the last one, and that memory of, look what happened last time. Even though it's a 1 in a million chance it's going to happen, it just happened, which means every time you get a 3-5, now until the next 1 millionth time, it's not going to happen. But you still allow that fear of missing out, right? There's the FOMO, but it incorporates in the woulda, shoulda, coulda. Last time I had this hand, I could have won. So this time I have it, I'm going to play it. Don't do it. Look at the odds out of the gate. If the odds aren't there, don't trade it. Don't allow the previous decision, whether good or bad, to affect your current decision. It's a new trade. It's a new at bat. It's a new hand, whatever you want to call it. So watch the woulda, shoulda, coulda. But it's basically part of the fear family. I mean, fear basically incorporates everything. You just have to peel the onion back and figure out which part of the onion is it. Fear's in the middle, okay, or maybe fear's on the outside too. But that's the thing: is a perfect entry is easy to see after it plays out. Right? How many of you done that? It's like you're looking at something, you're like, should I get in? Should I get in? Then you don't. You wait. Like, I'm going to wait, and then boom, it takes off and does exactly what you were expecting it to do. I should have gotten in. Same thing with the exit, right? Going back to what Jennifer was saying, you try to squeeze everything out of it. And I do too. So I mean, of course we do. That's the whole point. We're here to make profits, not to play games. So every business does that. I mean, you think Walmart's not trying to squeeze every penny they can out of every single product they have? It adds up a lot. Everybody makes as much profit as they possibly can. That's the whole point. Because then what do? You take those profits and you reinvest it. And you continue to grow the business. And trading is no different. But it's always easy to see after the fact. Just don't let that woulda, shoulda, coulda syndrome affect the next decision. That's the trap that a lot of us fall into. And I've fallen into it. I don't very often anymore, but I still do. Sometimes the emotions are just, they overcome and it's like, oh crap, what am I doing? I know better than that. Right? But hey, welcome to being human, right? It's just like, you do something that makes your spouse mad, you leave the toothpaste cap off, and it's like, you did it again. You haven't done it for 10 years. Well, there you go. So, yeah, there's Trixie. I don't know where the other one's at. Hopefully, I tried to give her a little loving before we started so she wouldn't come and be obnoxious. See, that's a good cat right there. She just sits there, stays out of the way, doesn't bother me. The other one gets up in my face and she sits down and hits the mouse or hits the keyboard. Anyway, so here's the next question. What should compel us to pull the trigger? So we know all about fear. We know woulda, shoulda, coulda. We know about FOMO. We understand all that stuff. Find a quality pattern, setup, whatever you want to call it. Something that says, okay, this is an entry point for me. This is what fits my style of trading, my risk tolerance, whatever the case is, right? Here's a perfect pattern. Create a good trading plan. Depending on your style of trading, right? If you do non-directional trading, then you're going to have probably a different trading plan than I have. I trade directionally. 99.9% of my trades are directional. I do one, maybe two or three spreads a year. That's about it. So I use a 3-to-1 risk reward, sometimes 4-to-1. If it's a highly volatile stock, I'll make it higher. But create a trading plan that puts the odds in your favor. If you have a good trading plan over time, then everything works out. And the last one is answering yes to the main question, which some of you have been hearing more lately because I think I got it to where I really like it, actually. I've always had it kind of the same way, but now I just think it just seems better here. Am I comfortable with the risk I'm taking? How much risk are you comfortable with? Are you willing to risk 500 bucks, 1,000, 5 grand, 10 grand? It obviously depends on what you're working with. But if you can't sleep at night because you're worried about your trades, what's going to happen tomorrow? And some of you might have experienced that last night. You turn the news on at 5:36, 8:30 Eastern time, and you find out the futures are getting hammered because Iran's getting hammered by Israel. The major news event that had an impact on the market. I didn't know. It was doing the what was that, trading signals, the Trade Watch Alerts promo last night. And just before it started, I saw gold start to take off a little bit. And it wasn't a massive move, but And we're about halfway through that. It's 5:30, 5:40 or something like that here, West Coast time. And I had toss run. I look up and it was the futures were down. The Dow futures were down like 80 or 90 points. I don't know why that's the one I happened to look at. I look up and they were down 600. I'm like, so I click the chart. I'm like, what's going on? And I think I can't remember who it was. Andreas, I think, said, "Oh, Israel's bombing Iran." I was like, "Oh, that'll do it." So if you were in a bullish trade yesterday and you woke up this morning and you were freaking out last night because you had too much risk on the table in a bullish trade and the futures are getting hammered this morning, you're probably freaking out. If you're ever freaking out, you have too much risk in the trade. It's that simple. When you're creating your plan or create your plan and then ask yourself the question, am I comfortable with the risk I'm taking? I got $1,000 of risk. No, I don't want to give the market $1,000 to find out if it's going to do what I want. Okay. So you can't answer it yes. So what will allow you to answer it yes? Your answer is no at this point. What will make you comfortable? Well, $500. Okay. Cut the position size in half. Do 5 contracts instead of 10. I'm comfortable with $500. Okay. I'm willing to take $500 of risk on this trade to see if I can get, 1,500 or 2,000. It's not that hard, right? It's a really simple question. And if you manage your risk well, then everything else will take care of it. The profit will take care of itself. As long as you preserve your capital and don't allow yourself to blow up your account, you will eventually get the hang of this and you will eventually do well. The home runs will come. You just got to keep swinging the bat. But you can't swing the bat so crazily every at bat that the team says, you're out. You suck. We're not going to keep you on the team because you're swinging for the fence every single at bat and you're striking out 90% of the time. So now let's play. Oop, I'm going to move that. Maybe. I can clean that whole thing up. All right. Who's got stuff they want to look at? Or am I just going to go through my list and see what's going on? Where is Apple? I've been wanting to pull the trigger on this for a while. I've been watching this for 2, 3, 4 weeks now. It's down a buck 89, so it's down a little bit more than that. Actually, it's almost a. I should have known that, huh? I see what they call yours like I call trips. I already know we're looking at IBM. Should have just started there. Um, yeah, I kind of jokingly called this a spider pattern a couple weeks ago, and I can't remember who it was. Maybe he's here. Was asking about it. I'm like, no, I was just joking. It just looked like, for some reason, it looked like a spider to me. From the side angle, which actually that's the benefit of having the cats because the cats now I've had a couple flies in here. Now that it's summer and getting warm, flies and some of these bugs had a couple of spiders. The cats get them. They love them. They just chase them. Gives them some entertainment. I heard them the other day running around going crazy, both of them. And I'm like, what's going on? Oh, there's a fly. So I got my what do you call them? Pest control, which is part of the reason I got hurt. I don't want mice in here, even though there's not, it's a big neighborhood. There's not really any mice that I know of, but I've had a couple of big dead rats show up in my backyard. So I'm like, yeah, I think a cat would be good to keep them away. Really? Yeah. Well, Apple's got all kinds of issues right now, just like Google does. Apple and Google are both, um, they have a lot of underlying issues that could have a major impact on them. I mean, the whole China tariff thing obviously is an issue with Apple. Um, which is interesting. I don't know how they didn't get out of there. Maybe they're just too tied to it economically. Because I met a gentleman the other day who they make GPS locators, and they're secondary that go on vehicles, and they're putting them on RVs. And I was like, don't they already have these things built in? He goes, yeah, but the problem is that people know where they are and they can be disabled. So their device is a separate secondary. It's a backup essentially. It's a backup to the primary device that people aren't aware of that it's there. So that's what I told him. I said, well, good. And now I know now I know where you guys are putting it because I was talking to him about it. And he goes, yeah, we put them here. And I'm like, okay, good. Now I can steal all these RVs right here on this lot. That he's like, yeah. I go, wait a minute. Usually these aren't pages, are they? They're not going to blow up, right? Just playing around, joking. Um, but yeah, I asked him about that. Did you manufacture them in China? Have you gotten away from that? He goes, yeah, we did in 2019. And I said, was it the IP thing? Then you worried about them stealing the IP? Because they've got a patent on it, right? It's a patented product. He said, yeah, that's exactly why we moved away from China. They went to Vietnam and Taiwan. So they have two different manufacturing places. But they got away from China because China steals everything. They steal all the IP. It's crazy. And so if you create a product here, you get a patent on it, and you have somebody in China manufacture it, they just take and reverse engineer it, or they just duplicate it. And then they go post it on Temu or Amazon, and they cut the price by 30 or 40%. They don't have to pay any royalties. So, people here in this country that create and develop a product, they start selling it, and then China knocks it off and literally destroys their business. So it's sad and unfortunate, especially when you have somebody that puts a lot of money and effort into a product and then it gets destroyed because some knockoff in China. And you can't go into their courts and do anything. You have no recourse whatsoever. So it's a bad deal. But yeah, Apple's got the manufacturing thing, the AI thing, like you said, Jennifer. Um, they seem to be a little bit behind the ball when it comes to some of the new tech. I mean, I'm sure they'll catch up. I have no doubt they will. And Google's got a lot of legal issues as far as they talk about getting broken up. They've got the same thing too. Is why would you go to Google search when you can go to ChatGPT or Grok or what's the other one? Perplexity. Those are kind of sounds like the three main ones right now. But people are starting to use the AI searches like ChatGPT in place of Google. And it's in a lot of ways better because it's scrubbing the web for all kinds of things. Google just has their own thing. And Copilot, I've heard of that one. I've never played with it. I haven't played with Perplexity either. I've done ChatGPT and I've been using Grok more lately because I've heard that it's the best one now. At least that's what some people say. Of course, everybody has an opinion, right? I don't use it a lot anyway, so it's fun to play with for me, but I don't really have a major reason to uh, to use it at this point. I have some ideas of maybe using it, but Copilot's Microsoft. Okay, that makes sense. I didn't know it was theirs. So, but I mean, you got it based on Apple. I mean, the pattern that I'm seeing here is a double top, and the midpoint's right there about there, and you got the 200 round number of 200, which is another reason. And then when you really look at the volume, I mean, this is a tariff crash, right? Tariff drop, not really a crash, but and then you look at the bounce back, and to me, this is really compelling. It's usually not this obvious, but when you look at the volume, the green means that it closed higher, right? So if it's a green volume bar, it means it closed higher than the previous day. If it's a red volume bar, it closed lower than the previous day. So you can see the volume. We got, the big tariff drop and then a big spike in volume on the bounce back up, which is no big, no surprise. Short covering. It's almost a capitulation type of move. But then the volume right here on this little rally is really small, relatively speaking. I mean, it was still about where the average was, but now that the average popped up, it's still low. But then look at the sell off those 4 days. The volume was significantly bigger than these green days. Then you got a few green days here. 4 is all. And the volume is relatively light, smaller than this one. Then you got several days in a row. What's that? 8 days in a row where the volume is increasing. I mean, it's steady, but as you get to the end of the drop, it's increasing even more. It's big. And then the volume bars here, it's kind of been pretty stable here. But when you look at the volume, the bears are clearly in control. When you look at how much volume they have on the down moves versus the up days, the bulls are not that excited about this. It's not massive, but it's big enough to notice. Most stocks are not this obvious, but I'm pretty comfortable with Apple being bearish at this point. And if it breaks down, especially below this, I'm going to watch to see where it closes today because the market's been doing that a lot the last few weeks. It'll gap down or drop off in the morning and then rallies back into the close. Um, I would be surprised if we don't sell off into the close today because the weekend's here, and with what happened last night, God knows what happens over the weekend. Things could get real chaotic. So I would imagine there's going to be a lot of people probably taking profits or getting on the sidelines tonight. But I've thought that before too in similar situations, and I was totally wrong. It actually rallied into the close, which was fascinating, but also a little bit crazy to me because I wouldn't want to be exposed on the upside with what's going on right now. Not for 2 full days where you can't do anything about it. But who knows? Sometimes the market thinks that I'm crazy, and other times I think it's crazy. Well, Spider's going to be SPX, so it's going to look pretty much the same. It's down 2.5 points. We're trying to go up and ring that bell, but I don't know if it'll get there. I mean, you can see there we got down this morning and we've taken back quite a bit of it at this point, but starting to roll over a little right now. And then the Qs, same thing, is going to look just like the market. It's just, I mean, we just like slow chop to the upside, and there's been really no significant retracements in the last 2, 3 months. So I would expect something, especially if there's some kind of catalyst. And obviously, last night was a start of one. Whether or not it keeps up is the big question. If it gets worse over the weekend and things go crazy, then yeah, we could see a big drop. I don't think we'll see a drop like we saw with the tariff news, but we could. It's always a wild card, and that's where, like I've said before, is I'm long term. I'm more bearish. I think there's a lot of underlying storms. There's a lot of good news, but there's also a lot of bad news. There's a lot of potential for an earthquake, if you will. If a bank fails, the housing market is starting to show some cracks. And if that gets worse, there was something I heard a guy saying this morning on CNBC about, I can't remember how he put it, but he's talking about a liquidity crisis. If that happens, I mean, there's all kinds of things that could happen that could send this market into a tailspin, just like we saw with the tariffs. And you get one piece of news, and the tariffs really weren't, in my opinion, I don't think they were that big of a deal, not big enough to sell it off 18, 20%. But obviously, a lot of people did, which didn't hurt my feelings at all because I was already on the bear side. And that's one reason, especially with where the market's at now, I would not be excited at all about getting on a bullish trade at this point because we're pushing all-time highs. And the odds of a drop are significantly higher at this point than the odds of a rally. It could break out and go north. We could get good news too. We could get something spectacular that happens, and it could take off to the upside. I just don't think the odds are leaning that direction. And I'm always playing the odds. I always looking at go, okay, from at this point, what are the odds it's going to keep going up? What are the odds going to go down? And with where we're at, I think the odds are significantly higher that we drop from here. Yeah, GLD is going to be super bullish because it's just a gold ETF. This is definitely, I think it's a good hedge, but you can see, I mean, well, this is what gold's done, and it's, where was it? It was just last year in like October is where it broke out. So it went 220 to 315, which is about right. This thing actually, I've looked at this before. I didn't really notice, but it does seem to kind of track approximately what gold is. That's interesting. It's not exact, right? But it was, I mean, 200. I think, where was gold at 200? I'm curious. Or 2000, I should say. Well, yeah, I remember this little symmetrical triangle going on. Figured if it breaks out of there, then we're going. And sure enough, that was, let's just say, where did it break out? March of 24. Here, while we're here, watch this. This is, did I mention this before? Yeah, so here's the, let me change that to logarithmic. Logarithmic. So there's gold historically, right? From back in what, 75, 76? That's a long time ago. I was born in 76, actually. Hit the big 50 next year. Um, I know it's weird. I started when I was 24 doing this. I had no idea what I was getting into. But so it bottomed out. I mean, it bottomed out at 100. And then from, well, yeah, that's 40. So this is a monthly chart. Somehow this number came way over here. So I drew that line right there. That's 551% in 40 bars in 40 months. So that's what, 3.5 years? So yeah, in 3.5 years, it went 550%. But then you can see it pretty much went sideways from, I mean, it peaked out in 1980, and it wasn't until 2001 that's where it bottomed out and started a rally. If we go from the very bottom to where it peaked out before it started going sideways again, that was 125 bars. So 125 months, that's 10 years, 600%. I don't know, what's that? Oh, that's that one. Okay, it jumps way over there. Oh, there we go. Okay. Oh, that's better. It puts it next to it. So yeah, I mean, 550% in 40 bars in 40 months. This is the 70s. This is inflation, right? Late 70s, early 60s. That was the inflation cycle. So 3.5 years, 500 plus percent. What have we been in the last 3, 4 years? Inflation cycle. So that is has potential to do that again. Here we just had the .com bust, right? It busted right in. Well, actually, it spiked up when there wasn't much of a blip there, but then gold started running. It went from what 250 up to 1750, 600%. That was 2011. 2024 is when it broke out. Again, if we go from this low here, taking, there's 11 years, it basically went sideways from that high to there. And if we scrunch this down, if we take say a 500% move, just like it did back here in the 70s, since we're in a similar inflationary environment, there's 10,000. You're not that much older than me, Brenda. That's only 17 or 18 years. That's not very long. Now at this age, 17 or 18 years doesn't sound like much at all. It's just not. I've already had three of those. But yeah, you can see how, if we go from here, we don't know the time frame of how long it will take, but if we have a similar inflationary environment like we did there, it took 40 months. So 3.5 years. We're at 3450 right now. That's still 3x to get to 10 grand from here, about. So that's where I'd mentioned before. This is what I'm loving about gold. It is very disciplined. There's a symmetrical triangle. Right? Where did it break it? It was March of 24, right? When it broke out of 2000. Yeah, actually, it was. It was March 1st of 2024 is when it busted north right there. But it's extremely disciplined. 244 points, symmetrical triangle that breaks out, goes 244, then slows down, pulls back. Another little triangle. Once it breaks north of there, it goes up to 244, pulls back to the previous high, 244, busts out of there, goes 244 points, gets stuck in this range about 244, and it goes a little bit below it, a little bit above it. And now it's breaking out of that. So the next level, if it stays on this stair step pattern, which is fairly common, is there 3680 or so. It's crazy how much I've been playing with this for 2 or 3 years now, and it's blown my mind how recently I've just noticed how beautifully disciplined it is. Because people are trading for numerous different reasons, but the short term traders are very active, and it's mostly technical analysis. So I did not know that until recently. It's like, oh, I mean, I knew that, but I didn't realize how disciplined it was until recently. It's like, man, it's nice. Let's get back to that. No, GLD looks hideous. That's gross. Look at it. It's gappy. But that's because this trades on US hours. The gold futures trade overnight. So it responds based on what the overnight trading did, just like you look at today's gap. Well, gold was up 80 or 90 points this morning, I think it was. It's up almost 50 right now. So it doesn't open. If gold's up a whole bunch before the market opens, where this can trade, then it gaps. Usually this is from like a foreign company that trades overseas and they're public here as well. The trading here on the US market will be based off of what happened the previous day overnight in the European market or Asian market, wherever it is. So this is the same thing with gold. That's why it's so gappy, which I'm not a fan of. But at the same time, if you believe one thing about gold, you're bullish on it, then, you can always pick this thing up. I would rather trade a gold stock instead of this. It's a little more consistent. It just doesn't gap like that because you really want to, here's a gap from 306 to 298 overnight. I'm not a fan of gaps, but if it's a longer term play, I'm not as concerned about it. But on a short term basis, it's like, yeah. Well, that's golf. How do I get golf? GOLD, because I can't type. There is no gold, GOLD. Really? That's interesting. There's no gold company that took the ticker symbol gold. I wonder if it's off limits. don't know if you were asking for Tesla, but let's look at it real quick. I'm just looking back and see what we got there. Um, yeah, the crazy thing about this stock is that um, that's what I thought too, Karen. Um, it's crazy how people are making decisions to buy or sell a stock based on political stuff. I can't. It boggles my mind. It's like, who cares if Tesla or if Musk is involved? I mean, I get it if he's not running the company. That part I understand. But people are making decisions. And if you're buying a Tesla, okay, $150,000 car, and you sell it because you don't like Elon, I mean, those are first world problems. And you go buy another EV. I met a guy recently that did that. I didn't say anything because I'm like, whatever. I just sit there and in my mind, I'm just like, okay. It just boggles my mind. I mean, people talk about homelessness and the world, poverty, and all this other stuff, but then you're trading in your $100,000 car for another $100,000 car because you don't like the politics of the guy that created the car. I just think it's stupid myself, but whatever. Hey, we have freedom here. You can do whatever you want. Really? Barrett Gold is B? Didn't it used to be what did it used to be? Oh, Barrick Mining. They changed to Barrick Mining because I think they're mining more than just gold now, which would make sense. Yeah, there it is. Interesting. Um, yeah, Tesla's just I don't know. I haven't played it for a while. Let me get back to that because I was looking at that. So yeah, it's kind of crazy when you look historically because this thing was down here at $2 and it took off in 19. Um, I mean, technically wise, I don't see any compelling reason to get in here. Is that today's? It is up $8. Interesting. There's a little minor support right there. I can see if it breaks out of here, I can see it coming up to here. It might break north of there. Who knows? Maybe that Elon's back now running the company instead of in the Doge thing. Then maybe that's what's compelling to go north here. I don't know why it's obviously some volume. That big sell-off day. That's the crazy thing. That's when the feud started between him and Trump. It's like, really, you're going to sell off Tesla because he's having he sent out a tweet and now there's a fight between the two of them. That's the part that boggles my mind. It's like, what's wrong with you people? You should be buying the company and based on what the company's doing. If you're an investor, if you're buying the company because you like what the company does, it's just anyway. That's why I got cranky because some of this is just so stupid. A lot of the political stuff is just so dumb. I mean, we probably if we all sat down and actually had real conversations about stuff, you'd probably realize that we're all pretty close to the same thoughts on most things, the vast majority of things. But their goal is to divide everybody, to make everybody think that we're all against each other. Slumber J. Oh yeah, gold. Well, they're going to be up today. Yeah, gold's up 6% right now, so they're going to be up today. But does that hold long term? I don't know if it does. I think gold's going to probably, or not gold, but oil's probably going to sell back off. So yeah, I mean Slumber J's hitting that resistance level. I'm just a little ascending triangle going on. So if it breaks out of there, then I'd get bullish on it, but not until it breaks out. And I'd probably wait for it to come back. If it breaks out, wait for it to a roll reversal. Okay, I'm letting the OCD win. Good enough. I'm going to conquer that or not. So yeah, I just don't see nothing compelling right here. If, like I said, if it breaks out, but I want to see it break out and then pull back. Oh, that's a good point, Trip. Yeah, if things get worse in the Middle East, then yeah, oil will continue to rise. So that's the wild card that we don't know about. So technically, at this point, I think it's overdone, but news will override technicals all day long. CVX pretty much the same thing. Gapped up. I mean, there's a moderate resistance there, gapped up and it's selling off, which is no surprise. It has been bullish, little ascending triangle there that it broke out of a few days ago. So again, not too excited about that. There we go, Trip. I'm not gonna leave you out. There's nothing to analyze on here. It's all time high, and there's nothing. Almost an evening star. Not quite. I mean, it's close, but not quite. The volume wouldn't be what you'd want it to be for an evening star. Oh, AMD was an AMD I was seeing this morning. Yeah, that one I was on my radar. Dark cloud cover the other day. Because yeah, it's got that resistance there about 120, 117. Big dark cloud cover here. Follow through the next day. So confirmation with decent volume, not a huge spike. Then a gap down this morning. So technically speaking, it's clearly in a downtrend. It's been cut in half. Basically, it was 200 just not even a year ago. The whole semi space was really bearish the last 8, 10 months. Nice. Nice. 47%, 8 minutes. Love it. Calls? Puts. Oh, it hit the 200 the other day. There's a major part right there. Um, oh yeah, yeah, nice. Yeah, those are always fun. I don't do those very often, but occasionally if there's an opportunity that shows up, but that's like a spread for me. It's like once or twice a year. So I've gotten really boring. I used to do that stuff because it's fun and exciting, and I'm like, eh. So yeah. Micron do the same thing, I assume. Same sector. Wow, that's a lot more bullish. See, there's now you see it. See, talk about the woulda, shoulda, coulda syndrome. Here it is, right here. So, well, this is the tariff news, right? Drops right here. We got a nice little double bottom. There's the midpoint. I have the whole plan set up right here, just to take a little piece of it because I don't know. With the tariff stuff still kind of swirling in this area. But we had a nice looking double bottom, right cheek up, breaks out of there, does a nice little pullback, kind of sits on it. Entry point 78.91. 3-to-1 target was at 86.77, right up there, about that support there. And here we are at 116. Like, why did I keep watching that and get into it? Well, shoulda, coulda, right? Because that's a monster trade if you hold on to it. But that's the big question is if. Just like with what was the one? It was during COVID, the big vaccine company. I can't remember it, but it was 10 or 11 bucks on a Wednesday, I think it was. And the $13 puts, $2 out of the money. Uh yeah, it wasn't Moderna, it was another one. It was a different one. That one went crazy too. Maybe it was Moderna. I don't think so. It seemed like it started with a V, but um no, it was a little guy. It was some new player, but I don't think it was Moderna. I'd recognize it, I think, if somebody put it in there. It seems like it started with a V, but anyways, it's at 11 bucks on a Wednesday. The $13 puts for Friday, 2 days out, we're going for like $3.50. It's a buck and a half of time value. Or maybe I think they were just over $3 because my cost basis would have been just under 10. And I'm looking at it going, it's probably going to run. And if it doesn't, I'd be okay buying this thing at 10 bucks. 2 days later, it closes at 13.05. I was stoked. I mean, I got $3 or $3.50 of premium for 3 days, which is, having to put up $5 or something like that. Or yeah, I think my margin was $5 or something. I mean, that's a 60, 70% rate of return in 3 days. I'm like, woo! Well, 6 months later, the thing went to like 270. If it would have closed under 13, it would have got put the stock. I would have owned the stock for under 10 bucks, which I would have been content with because I thought there was potential there. I stopped paying attention to it, and 6 months later, I saw it was like $270. I'm like, I want to rip my hair out. But would have just closed at $12.99, would have had not a 60% rate of return, but like a 6,000% or whatever the number is, would have been huge. But woulda, shoulda, coulda, right? We all have them. We have stories all day long. The reality is, I probably would have sold the thing at 100, would have never held it to 270. So, I mean, That's the tricky part, right? That's the hard part of trading is the woulda, shoulda, coulda part. Is you're always looking back and going, "Ah." Like I said, you can always see the entry point beautifully after it plays out. You're like, oh, why didn't I do that? Because you didn't know it was going to do that. In fact, I was on Benzinga. I don't know. This is I don't know 2, 3, 4 years ago. And Spencer, the guy that we always talked, interviewed, and talked about patterns, and he's, well, why don't you just get in there and get out there? I go, okay, hold on, Spencer, watch this. Okay, now look at that chart right there. Not knowing, pretend you don't know what's behind it, what actually happened. Look at that right there. Is that something compelling enough for you to get into? Oh, that's a good point. Yeah, because you don't know, because none of us know that that's coming. But it's so easy to get stuck in that woulda, shoulda, coulda mindset. Like if I would have just done that, and then you look at something today and you go, well, and you make a decision based on what could have happened if you would have gotten in, but you didn't get in because you didn't know at that time that that was going to happen. And even if you did, you probably would have been out. I mean, I would have been out at least part of it here at 86. That's why I scale though, because then you have the opportunity to capture these big moves. No, Trib. Gosh, I know it's killing me now. I don't remember what it was. I'll think of it as soon as we're done, which actually we're supposed to be done. So, uh, you know what? Let's look at maybe it was Moderna, and I've just lost my mind. I don't think it was because maybe it was Moderna. Was it down there? Yeah, it was down at the. No, well, is there a split? It was down at $12, but no, this thing was down like it was like a $5 or $6 stock at one point. It was at 11. It was starting to move. I don't remember what it was. Maybe if I remember it, if I find it, then I'll bring it up next time. Nah, it wasn't any of the big boys. It was a little guy. Like I mean, back here, nobody knew who Moderna was. Right now, everybody knows who Moderna is. It was some other one. Well, let's see. No subsector, no component. We don't have a sector, so. Ooh, I think that might be it, actually. I think, what's the symbol on that, Trips? I think that might be it, actually. I don't think VRTX was it. Vertex Pharmaceutical? I recognize the chart if I saw it, but no, because that wasn't yeah, NVBX. Yeah, because in 2020 that was thing was $200. This thing was at $11. Yeah, that's at NVAX. I think you got it. I think that is it. Yeah, because it was yeah, I think that was it. Yeah, that was it. Because I remember it was one of these days here. Yeah, I think it was that pop right there, actually. Where did it? I know this is crazy. Why am I going back and look at this just to get cranky again? 1180 was it here? Maybe trying to figure out where. I know what to do. Oops, 1305. I got to find that close. It's one of those days. Is that a Friday? 27, 30. That's it right there. Yeah, that's it right there. Yeah, I think it was this. Yeah, this was Wednesday. This was the day it was down to like $11. I sold the 13s. And 2 days later, that's Friday, it closed at 1305. And then it went 2 weeks later, it's at 26. I'm like, well, there's a double in 3 weeks. I'm like, what the heck? And then you see what happened. It's like, it's $175. Like, what's that? 4 months later? Like, yeah. Even just 100 shares went 1,000 to 17,000. And then it did this, went sideways for a while. And then it went like, yeah, it went to 325. So, but you know what? Everybody has that story. Woulda, shoulda, coulda. I've got lots of them. When you trade actively, you're going to have a lot of them, and they irritate you. But the key, I'm going to wrap with this. The key to that is making sure that those woulda, shoulda, coulda stories, those memories that you have in your mind, is don't let them affect your decision in today's trade. Look at this thing; it's back at $7. Just every single trade is a new at bat. Treat it as an individual trade. It has nothing to do with everything else you've done or going to do, or your frustrations, or your irritations, or your excitement. It's easy to get excited about a trade because you have a kick butt trade. If you have several in a row that you kick butt on, I mean, like I torn it up on gold in the last 2 days. And right now, I'm literally forcing myself to pull back because I'm like, whoa, slow down because I want to keep hitting home runs. And when you start doing that, you overtrade and then you give back all your money, and it's like, now what? So recognize that when your emotions are high because you're kicking butt and you're on a good streak, you're going to get back to normal again. Just like any athlete, you have good streaks and you have slumps, right? You get on fire, right? And when you're on fire, you're on fire. You want to be on fire all the time, but you can't stay on fire all the time because eventually you burn out, right? So just remember that, that sweet spot in the middle is where you want to be. Singles, doubles, strikeout, walk, singles, double, home run, sweet. Another home run. Woo, I'm on fire. Another home run. Okay. And then you go into a slump and you like strikeout, 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 strikeout. It was like Gary Payton said years ago. Somebody asked some interviewer in college when he was asking some local thing. It's like, well, you were on a cold streak. Why'd you keep shooting? You can't make a basket. You can't snap the cold streak if you don't keep shooting. You got to keep shooting. It's always stuck in my brain. I remember my dad saying something about that. He goes, that's a professional right there. He's going to the pros, which we already knew anyway, but that's what you have to do. You have to keep shooting. You can't let the streaks, the good streaks, skew your thinking. You can't let the bad streaks skew your thinking. You got to stay in that calm, cool, collected zone. So, all right. Any other questions, real quick? Oh, does the same criteria for gold apply to silver by ounce of price? Yeah, silver is also by the ounce. As far as I know, I don't trade silver, but I'm pretty certain it is. I've heard him talk about that, so I'm pretty certain it is. Other metals, I'm not sure what they trade in, but Costco is actually selling little mini gold bars by the ounce. They would sell out. They have them online for like an hour and they'd be sold out of them. But that was back when it was at 1800, 2000. You go online and shop at Costco and you buy a gold bar. They ship it to you. And they were selling out like mad. And central banks are buying tons of gold. Something like $4 billion of gold came into not last month, the month before, came into the country, was imported into the US. JP Morgan bought boatloads of gold. Big banks, central banks are buying tremendous amounts of physical gold. That's why it's running as high as it is. And I wouldn't be surprised in 2 to 5 years if it's at $10,000. So we'll just have to wait and see. So something could happen, and all of a sudden things change, and it could crash back to $1,000. Doesn't look like that's going to happen, but it's always possible. So, all right, y'all have a great weekend, and we will see you when we see you next. All right, take care. Bye.